Wasted money on cures. Forgot how to fix myself. They say that time is free. Then why is it so precious? Oh, I'll say memories in my head, like Polaroids on walls. They remind you to look ahead. Time is running out. Time is running out. Lately I've lost my track. I've sailed the deepest seas, hoping to find something to bring back better times. Oh, I'll say memories in my head, like Polaroids on walls. They remind you to look ahead. But time is running out. 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 Time is running. Time is running out. But time is running out. What if my best days are over? They can be over. They can't be over now. Time is running out. What if my best days are over? They can't be over now. Time is running out. Time is running out. Time is running out.
Evening all, Jim here at Tutor2. Welcome to, well, I was mentioning in the live chat just now, session 8 of 10 sessions we're running for BTEC National Business Unit 3 this term to help learners, students get ready for the next sitting of Unit 3, which as we record is January 24, just after the festive break. Session 8 tonight, and we're finishing off on our guided tour through some of the key financial statements. Tonight our focus is the Statement of Financial Position, or the SOFP. SOFP, is that how you say it? Anyway, SOFP for short. Last week we had a look at the Statement of Comprehensive Income, or SOCI, easier to say. And in the last two sessions, we're not going to do them tonight. In the last two sessions, we're going to look at accounting adjustments, things like depreciation, accruals, prepayments, amortizations. So all that fun still to come. So 20 minutes or so tonight, just looking at the basics of the Statement of Financial Position. If you're joining us live, have a go at the activities and the calculations and the questions. If you're watching on replay, give yourself a bit more time maybe to have a go at these activities. Let's take a look at what the examiner in Unit 3 requires you to know, he says, trying to press the right button. There we go. F2 is the specification reference for SOFP. Anyway, Statement of Financial Position. So we need to know how to complete and calculate and amend. We'll look at amendments next week. The vertical presentation format. So we look at the different types of assets, liabilities. And then also with the SOFP, we also look at totaling up the various amounts. And not only that, but we also look at how a business is financed. So it's not just the assets and liabilities, but it's also about what's on the bottom part of the Statement of Financial Position too. Now, this is an introductory session, but I just want to draw attention to the fact that this is a quite frequently examined topic in Unit 3. I've just highlighted on the screen here 3 or 4 examples, recent examples from recent Unit 3 papers in terms of how this part of the specification has appeared. Don't forget, we're looking at business finance here rather than personal finance. Been a couple of 5/7 markers where you're actually asked to complete the statement of financial position. Some missing numbers. So each time you complete a missing number, you get a mark. And obviously, when we look at adjustments, you're also asked to consider how the statement is, how it's adjusted, what the effect is of making some adjustments. Lastly, don't forget the statement of financial position is really useful when it comes to our ratios. Now, we've done separate sessions, haven't we, on our liquidity ratios, efficiency ratios, and profitability ratios. Well, in particular, liquidity ratios are drawn from this statement. And of course, the efficiency ratios also use information from it. So lots of examples of past questions on this. So it's worth us being on top of our concepts and terminology and our calculations. With that in mind, should we get going? Now, I know that, as I've said in previous sessions, there are no multiple choice questions in Unit 3, but we do like to use them just to help us test our knowledge and understanding of the key concepts. And also it gives you a chance to either type A, B, C, or D into the live chat. Have a go if you're joining us live. If not, if you're watching on replay, just have a think as to what you think the answer is. Here's our first one. So what is the main purpose of the SOFP? A, B, C, or D? Is it to measure the costs and revenues and expenses of a business? Is it to show the assets and liabilities at a point in time and how they're financed? Is the SOFP, is it the main purpose to show the cash inflows and cash outflows, or do you think it could be to show the profitability of the business at a point in time? What do we think? Kieran is first into the live chat. Let's get Kieran on the screen. Here's the first in the live chat. Kieran's going for B. So well done, Kieran. You're the first in. Always like to give a shout out to the first person in the live chat. More answers coming in. Could be B, couldn't it? Could be A, could be C, could be D. A few more seconds. Let's have a look at the answer. Well done in Spry, and others have also gone. I've copied Kieran. Not you copied, you've gone for the same answer. It is indeed B, isn't it? Yeah. So the SOFP, that's what I'm going to call it from now on. It's all about what assets and liabilities does the business have. That's the top part of the statement. The bottom part, which will always equal the top part because of double entry bookkeeping. Let's not go there. It's about how the business is financed, the capital and the profits and the non-current liabilities, how the business is financed. Okay, question 2. Now we're into a bit more detail here. Which two of these, I'm looking for 2 letters, please, would appear as a current asset in the SOFP? So just 2 of the 4 listed there would appear as a current asset. Remember, we categorize our assets in terms of, so we categorize items in terms of assets and liabilities. Which of those 2, or which 2 of those 4 would be a current asset? So in the live chat, give you a little bit longer, type 2 letters in. Or if you just think you only know 1, just type 1 letter in. If you think it's all 4, I'll give you a clue. That's not correct. Which 2? Don't forget, with business finance, it's a bit like learning a new language, isn't it? Lots of terminology that appears a little bit unusual. We just have to build confidence and awareness of what these things are. What have we gone for? Valerie's saying definitely B. Spry's saying definitely B. Leonie, welcome back. Leonie, definitely B. Lots of B's and a few A's. A few A's coming into the live chat. How are you getting on if you watch on replay? Should we have a look at the answer? Well, the answer is B and C. Now, all the fun of the fair is next week when it comes to looking at prepayments and accruals as well. But inventories, oh, police car going by. But I think I've got the right answer. B, inventories, isn't it? That's stocks, raw materials, finished goods. Well, that's current assets. Prepayments is also a current asset because a prepayment has value. It's something we've paid in advance where we get the value later and we've paid in advance. Accruals and trade payables would appear as current liabilities. So they are sort of the opposite of B and C. So B and C was the correct answer. So well done if you went for that. Try this one now. Which one of these will be included as a new type of asset here, a non-current tangible asset? Part of the challenge for learners with this part of the specification is trying to work out what each of the categories are. So what do we think? A non-current tangible asset, just one of those would be in that bit of the SOFP. Which one do we think? And it is just one. I mean, they would all appear somewhere. But which one would appear as a non-current tangible asset? Looks like we might have stumped one or two people, but Leonie's saying no. I think I know the answer. It might be C. Shall we see if that's the correct answer? Let's have a look. It is C. Yeah, land and buildings. So now that's caused a little bit of confusion with our live audience. So let's go through with these, shall we? Let's take our time on this one. Well, a long-term bank loan's not an asset, is it? That's a liability. And indeed, a long-term bank loan, that would be part of our non-current liabilities. So that's not that one. Trade receivables, well, we know they are an asset. Trade receivables, if you remember from our session on liquidity ratios, trade receivables are amounts that are owed to us by our customers. But we expect to receive them within 12 months. So therefore, they are a current asset, not a non-current asset. Cash balances, well, cash is cash, isn't it? We can spend it now. So that's also a current asset. So land and buildings is non-current. It's something we expect to keep within the business for more than 12 months. And it's definitely tangible because we can see them. We occupy them. They are tangible. So that's why they're called non-current tangible assets, land and buildings. Also in that category would be things like plant and equipment, computers, motor vehicles, that kind of stuff. The stuff that's there for use in the business for more than a year, but is tangible. So well done if you got that one right. Now, having said that, I'll probably throw in an even harder question now. Which two of these, four more things for you on the screen to think about, which two of these are examples of intangible non-current assets? So we've dealt with tangible non-current assets, but which of these are examples of intangible? Sounds the same, but it's different. What do we think? Now, I've already given the game away about one of them, haven't I? In fact, two of them, having done the previous question. So let's get Leonie on. You're first into the live chat. Lots of people adding answers. Leonie's gone straight in with B and D. Let's have a look in a second. What do we think? Intangible suggests that it's something you can't see, but it might have some value. And indeed it was. Well done. Well done to those of you. Leonie was first in. It is indeed B and D. Now, what do we mean by this? Intangible. Well, let's deal with the non-current first. Non-current means an asset we intend to keep in the business for more than, or has value to us for more than 12 months, not a current asset. So patents and trademarks, well, they last a long time, don't they, hopefully? They've certainly got to give the business protection. And are they intangible? Yes, they are. They do have a cost, and that's usually the value that we attribute to them in the statement of financial position, but they're intangible, aren't they? They're conceptual. You can't go to a patent shop and come away with, a box of patents or trademarks. And similarly, brands, they're also intangible. The value of them has value to the business, but it's not something you can feel or touch. So, but you can, under certain circumstances, particularly where you buy a brand, you can include the value in your statement of financial position. So it is indeed, as Spry has confirmed as well, B and D. Okay, now, we've mentioned a lot about assets. What about this other side of the statement of financial position? What about these liabilities? Which of those, A, B, C, or D, is a definition of current liabilities? So you almost have to split that term up into two, don't you? What do we mean by current? And also when it's attached to liabilities, is it A, the cash and other assets? Probably not. Could be A, of course. Is it B, is it amounts owed by a business that are due within 12 months? Could it be C, investments and assets expected to provide value for more than a year? Or D, financial obligations not due within 1 year? And it's just one of those. I don't know why I dwelt on D, financial obligations, as if to try and persuade you to say D in the answer. And here's why. Because the answer is B. Yeah, so let's split it up. Current means within 12 months. Now, we've dealt with assets. Current liabilities is amounts that you owe as a business that you have to pay or settle within the next 12 months. Okay, so in other words, from a liquidity point of view, you need to have the cash to be able to do that. Whereas financial obligations not due within 1 year, It's longer than 1 year, isn't it? So that's going to be non-current liabilities. So the answer is indeed B. Excellent. Okay, now we're just also thinking about, we said that the statement of financial position has two parts. One half of the statement is known as capital employed. So what is meant by capital employed? Now, we've come across this before with our return on capital employed ratio, but what do we mean by capital employed? We'll find the answer to that in our statement of financial position, but is it all the current and non-current assets in the business? Is it B, how much the owners have spent on the business? Could it be C, is it the total investment in the business, such as owners' capital and long-term debts? Or D, is it the total value of the business? What do we think? What's meant by capital employed when it comes to the statement of financial position? And if you think about the return on capital employed, when we divide profit by capital employed, that should give you a clue as to what the right answer is here. Because what are we measuring there? We're measuring profit as a percentage of something to give it a feel for what the return is. A few more seconds. Our live chat audience are having a good think about this one. What do we actually mean by capital employed? Shall we have a look at the answer? Let's have a look. Well, the answer is it's C. Capital employed is what we've got invested in the business. And of course, that investment comes from a number of sources. It comes from share capital that the owners of the business put in, or owners' capital. It comes from the profits that we decide to keep in the business. In other words, they're left invested in the business. And also it comes from the finance that's provided by non-current liabilities. That is what's meant by capital employed. So it's owners' capital plus retained profits plus non-current liabilities. That's what we have invested in the business. And return on capital employed, therefore, tells us what the return is on how much we've invested in the business. So the answer is C. Well done, Spry. Just looking in the live chat. There's a question mark after C. Take away the question mark. You got it right. Okay, right. That's it for MCQs. We're going to finish off with a couple of little activities just to get us diving deeper into this funny sounding statement. And the first one is a calculation blast. Now, we're going to give you 2 minutes to do this. On the table there, I've drawn some data, some information from a statement of financial position of a business at a particular moment in time. Just using those 5 bits of data there, can you work out for me 1 or 2, if you want to have a go at both, 2 numbers for me? So work out and tell me what the total for current liabilities is. And if you've done that, or if you want to try something different, work out what you think the total for net current assets is. Now, both these two are items that would appear as totals on the statement of financial position, just using those 5 pieces of data though, nothing else. What should we do? Should we stick 2 minutes on the clock? Let's stick some music on to start with. 2 minutes on the clock. Here we go. I'll mute myself for a minute, which will be a blessing for most of you. So we've had a minute, so we'll keep the clock ticking down. Don't forget, current liabilities, those are going to be amounts that we owe that we'll have to pay within a year. So we want to be ignoring, for current liabilities, items that we might decide are current assets. We're only looking for current liabilities. And current liabilities is going to be a selection of some of those 5 items listed there. Lots of answers coming in. I won't spoil the fun for everybody else by displaying the answers on the screen from the contributors in the live chat, but well done for having a go. Now, don't forget, in a calculation like this in Unit 3, you'd want to make sure we write our formula down, get a mark for that, show our workings, and then if we make a slip of the calculator, if we make an error, then hopefully we'll still be getting some credit. Let's turn that inspirational music off. Now, let's go through these, shall we? Current liabilities, what do we get for that? Well, I'm going to check my numbers as we go through them. You know me with numbers. It's not unknown for me to make a small mistake. Let's have a look. I think current liabilities is £57,000. Do you agree with me? Let's have a look at it. Well, I've picked out the items that I think are current liabilities. Well, bank overdraft all day long is a current liability. The bank overdraft is an amount that is owed to the bank. And in theory, the bank could turn around and say, we need it paying now. And so the business has to put a bank overdraft, £26,000 in current liabilities. Also, accruals. Now, we're going to go through how you calculate accruals next week, but accruals are also amounts that we need to include in current liabilities. £10,000 there. This is an allowance for something we're going to have to pay, a cost that perhaps we have incurred, but you've not yet paid. So that's a liability. And lastly, I think the other one is £21,000 trade payables. Trade payables are amounts that we owe to our suppliers. And again, you'd expect those to be paid within a year. So adding 26 and 10, that's 36, plus 21, £57,000 is what I went with for current liabilities. The other 2 items in the table there, they are current assets, aren't they? Trade receivables. That's amounts that we are owed by our customers. That's an asset for us. And inventory, amounts in the warehouse and what have you, those are also assets. So with that in mind, we can then work out our net current assets. And net current assets is, and Spry got the correct answer here, just to prove that. Let's stick that on the screen there. I spotted that. I think that was the first correct answer for part 2 there. Net current assets, the formula, always start with the formula. It's current assets less current liabilities. Those are 2 totals, aren't they, from the statement? Well, our current assets are trade receivables, 112,000, plus our inventory, 46. And then we take away our 57,000 of current liabilities. And the difference is 101,000. There it is. Well done. So let's finish off with a little activity just for 5 minutes, well, maybe 3 or 4 minutes. I mentioned in Unit 3, the examiner is quite fond of giving you a statement of financial position that is not quite complete, with some missing numbers in it, perhaps working out a missing number based on a total or working out a total. Well, I've done the same here. I've just created a simple statement of financial position, and I've put some numbers or some letters on the screen there, A, B, C, and D. There are 2 C's, but as we'll see in a minute, the 2 C's are the same number because they have to be. So again, let's stick 90 seconds on the clock this time. If you could, in the live chat, if you're with me, type in, say, I don't know, let's say A dash and your number for trade receivables. And then there are some totals to calculate, aren't there? And D for retained profit. So have a go at as many or all or none of those as you wish. And have a go in the live chat. Let's stick 90 seconds on the screen. Here we go. Down to our last 15 seconds now. So if you're in the live chat and you want to have a go, stick the answer in there. I won't put it on the screen unless you say, Jim, please put it on the screen. There we go. Our timer has run down. I'll keep an eye on the live chat to see what other entries are coming in. Lots of answers coming in. Let's turn the music off, shall we? Hannah's saying A is 28,500. Could be, couldn't it? Sounds like it could be a good number. Lots of other numbers coming in. Let's work our way through them, shall we? Don't forget with this one, there will typically be a mark for each missing number. So even if you're not sure about one or two of them, have a go, add as many as possible. Every mark counts in Unit 3. We don't want to be missing a mark just because we don't particularly fancy the whole question. Have a go at all of them. Or some of them, but have a go. And let's have a look at our first one there. Now, what could A be? Well, A looks like it's a sort of number that's part of a total, isn't it? So we're told our current assets total up to £81,000. And we're given two of them, 18,500 inventory and £34,000 of cash equivalents, cash in the bank. So the missing number must be 81,000 less those two, which is indeed, as Hannah said, let's stick Hannah's answer on the screen. It is indeed 28,500. So well done. There's your first mark. Don't forget, in the statement of financial position, we're often asked to total things up. So the next one, B, looks like we're being asked to total up the current liabilities, doesn't it? What are the total current liabilities? Well, there's two of them. There's £37,000 worth of trade payables and £12,000 a short-term bank loan. What that means is a bank loan that's going to be paid within the next 12 months. And so therefore, the two of them added together give us B, which is indeed £49,000 of current liabilities. So there we go. Current assets, 81,000. Current liabilities, 49. Now, what about the net assets number? What's that? Well, net assets is your non-current assets, 110,000, plus your current assets of 81,000. Take away your current liabilities of 49,000. That's what we mean by net assets. And I haven't seen a correct answer for that yet in the live chat. I'm sure lots of you have had a go and have got the answer in front of you. It is indeed £142,000 because it's £110,000 plus 81,000 less 4,942. And as you can see, by magic, that's also appeared on the other side of the statement of financial position, the bottom bit, because the net assets total is always equal to capital employed. Now, therefore, we can work out the difference between net assets of 142,000 and we're given £5,000 worth of share capital. Therefore, retained profit must be the difference between the two. Therefore, the answer is £137,000 was our retained profit. There we go. There is a completed statement of financial position. I tell you what, we've got 1 minute left. Should we do a bonus activity? There it is. That's one part of it. A quick reminder back from our liquidity ratios. Last activity. Give you, what do you think? 60 seconds on this one. Bonus activity. Calculate the current ratio. Let's see who's first. Don't forget the current ratio, the formula. Always show your formula. Substitute the numbers and then express it as a ratio. And looking at that table there, you only need to use two numbers, don't you? We've got everything we need there to be able to calculate the current ratio. So don't forget, this is the current ratio, not net current assets. It's a ratio. It's going back to our liquidity ratios that we covered 3 sessions ago, wasn't it? There we go. Clock's up. Time flies when you're having fun, doesn't it? Should we have a look at what I think the answer is? I hope I got it right. I think it's 1.65 to 1. What do I mean by that? Well, my current assets are £81,000. We worked at that total, didn't we? And we're dividing by our current liabilities of £49,000, and we express it in relation to another as a proportion of 1. So in other words, our current assets are 1.65 times our current liabilities. In other words, we've got enough current assets to be able to pay our current liabilities. So our current ratio there is reasonably strong, reasonably positive. 1.65 to 1. We don't need to use non-current assets. I know a number of people in the live chat have used non-current assets in our current ratio. We don't need that. It's just current assets divided by current liabilities, 1.65 to 1. And that's a nice way of sort of matching back to our session on liquidity ratios. Right, that's session 8 done. If you've not caught any of the previous 7 sessions, they're all available on tutor2.net/live and on YouTube and our National Business Unit 3 playlist. Maybe catch some of those as you're preparing or revising for Unit 3. The next 2 sessions are all going to be around perhaps the trickiest area of Unit 3 Business Finance, which is adjustments. Next week, we're looking at accruals and prepayments. The week after, we're looking at depreciation and amortization. Not to be missed. You won't believe how much fun they are. So hopefully you can join me again at 6 o'clock next Monday for session 9 of this series. But for now, cheers.